everyone, Zach Pickoff here, and welcome back to another lesson video. Today, I will be going over the 21-2 text. So let's jump right into the video. Okay, so as I had stated before, I'm going to be going over the 21-2 text, which is the second and final lesson in Chapter 21. That's right, Chapter 21 is a very short chapter with only 2 sections. And after I finish recording, editing, and uploading this video, along with the 21-2 work together, we will be done with Chapter 21, and we'll be moving on to Chapter 22 relatively soon. But anyway, let's jump right into the 21-2 text. So in this lesson, we will be learning about accrued expenses. Alright, so there are a couple of key terms that I'd like to go over before we start the accounting part of this lesson. So accrued expenses are expenses that are incurred in one fiscal period but not paid until a later fiscal period. And accrued interest expense is interest that is incurred but not yet paid. Okay, next we're going to be talking about when adjusting, closing, and reversing entries are recorded. So adjusting entries are recorded on the last day of the fiscal period, which is December 31st. Closing entries are also recorded on the last day of the fiscal period, which is December 31st. And lastly, reversing entries are recorded on the first day of the new fiscal period, which is January 1st. Alright, next we're going to be talking about analyzing an adjustment for accrued interest expense. So when we analyze an adjustment for accrued interest expense, there are a few steps that we have to follow in order to complete this process. First, we record a debit to interest expense on the worksheet in the Adjustments debit column. Next, we record a credit to interest payable on the worksheet in the Adjustments credit column. And finally, we record the adjusting entry in the General Journal. Okay, next we're going to be talking about posting an adjusting entry for accrued interest expense. So when we post an adjusting entry for accrued interest expense, there are a couple of steps that we have to follow in order to complete this process. First, we post the first amount as a debit to the interest expense account. And then we post the second amount as a credit to the interest payable account. Alright, next we're going to be talking about recording a reversing entry for accrued interest expense. So when we record a reversing entry for accrued interest expense, there are a few steps that we have to follow in order to complete this process. First, we write the heading, which is reversing entries, in the account title column. Next, we record a debit to interest payable. And finally, we record a credit to interest expense. Okay, so the last thing that we're going to be talking about in this lesson is paying a note payable that was signed in a previous fiscal period. So this transaction reads, on March 1st, paid cash for the maturity value of the September 2nd note having a principal amount of $10,000 plus interest $600 for a total of $10,600, check number 916. All right. So when we pay a note payable that was signed in a previous fiscal period, there are multiple steps that we have to follow in order to complete this process. First, we record a debit for the principal of the note, which is $10,000, in the general debit column. Next, we record a debit for the total amount of interest, which is $600, in the general debit column. After that, we record a credit for the maturity value of the note, which is the total of the principal and the interest, in the cash credit column. And finally, we post the amounts in the general columns to the general ledger. Okay, so that is the end of the 21-2 text. In the next video, I will be going over the 21-2 work together. All right, thank you.